Shemai guys, welcome back to the Life to the Full podcast, the podcast that helps you make the most of your time here on Earth. My name's Dav Morse, I'm your host. It is my job to inspire and to encourage you to live life to the full. Today, I am returning to my roots, my expertise in the world of personal finance is being summoned once again. On the Life to the Full podcast, we talk about 5 pillars of health: financial health, physical health, mental health, relational health, and spiritual health. Wait for it. And there it is. Yes, today we are returning to the question of how can I start investing? How do I invest with £100? How do I start investing with £1,000 or maybe even £10,000? This question is very difficult to answer unless you're having a one-to-one conversation, because it depends on so many things. Is this the first £100 that you've got to save? Or do you already have a big portfolio of investments already saved? And what to do with an extra £100? Well, those two are very different things. So I'm going to address this from a few points of view. I'm going to give you a framework of how you can think about things and adapt it to your situation. If you want to get in touch for some more personal coaching, then you can do that. You can get in touch with me on Instagram, Life to the Full podcast. I'm also on Threads. Check it out there. So I see a lot of people asking, how can I invest £100? Unfortunately, most or many of these people are actually saying, I'm 21, I've got £100. How can I turn that into £1 million by the time I'm 25 so that I can sack off work and just enjoy life? That is the intention behind the question for many people who ask this. If that's you, then I've got a course which will cost you £100, and I guarantee it'll make you a millionaire in 4 years. Link in the description. Obviously, that's a joke. That's not true. There's a fundamental issue with the premise here. Investing should be a long-term thing. Investing is not something you do to get rich quickly. Investing is not something you can do when you're 21, put in £100 into some investment, and then suddenly wake up a millionaire a few years later. Investing should be a long-term, boring thing. Something that you do month by month for a long time. If you are on board with the fact that investing is something you'll be doing until way beyond when you retire, you know you're not going to get rich quick without gambling and getting extremely lucky. You're committed to the long game, you just need to know how to get started, then let's look at what you can do with your first £100 investing. If this is your first £100, we already know it's not going to make you rich. You hopefully are going to keep adding to this every month for the next 40 or so years. So this is all about learning how to invest, how to get started and learn the lessons that you need to have a successful long-term investing career. You need to spend not just your £100, but also time into learning about how to make your money grow. Got some top tips starting back in episode 12 of the podcast, so head back to find out. We're all playing the money game, whether we realize it or not. There are some tips in there, and there are a few more episodes after that to talk about how to win the money game. You'll also be using your first £100 to find out what kind of investor you are. Do you panic? Do you sell? Do you feel the urge to sell things when they go down in value? Can you train yourself to not do that? Are you more risk averse? Are you more risk happy? That is up to you to learn about yourself. So that's one of the things you'll be doing with your first £100. There are 3 main ways to invest, although I will mention 1 or 2 more later. The first 3 main ways to invest are stocks, which is ownership of companies, property, or in a business. With just £100, it's going to be hard to get into property in any meaningful way. And so this is where you have to know yourself. If you were the kind of kid who would buy sweets in bulk and sell them at school for a massive profit, then you might want to think about spending your £100 on some kind of business. Maybe you could buy some cleaning products and start cleaning people's houses. Maybe you could buy stuff on eBay or Facebook Marketplace and try to resell them for more. Maybe you buy a microphone and become a voiceover artist. If you're not interested or you don't have the time for that kind of stuff, then with only £100 to invest, I would do the following. I would expect to lose money. This is actually a really good lesson to learn with £100, so that you can try and avoid those things when you're investing £1,000 or £10,000. This is what I would do. I would buy £5 of gold. Then I would buy £10 each of 3 different companies that I like. Maybe Apple, maybe Greggs. Not for me, but maybe. Maybe HSBC. I would buy £10 each of 3 different companies that pay a dividend. A dividend is just a bit of profit that the company pays out to a shareholder. Then I would buy £35 of a global index fund, or an S&P 500 index fund. Dav, I don't know what you just said. I don't know how to do that. Can you explain it again like I'm 5? Yes, I can. I will do that. Firstly, let me explain why I said what I said, and then what you can expect, and also practically how to do that. The reason that I would buy some individual stocks with £100 and some index funds is that I can eventually learn that buying individual stocks is actually a really difficult thing to do. And in fact, probably over the long run, you're better off investing in an index fund. But what does all that mean? First of all, you need somewhere to buy your stocks. Just like you have a bank account to hold your money, you can have a place to hold your stocks. You're most likely going to do it online or on your phone, on an app. There are many apps out there, but in the UK, I would recommend Trading 212. They are easy to use, they have lots of options of things to invest in, and they are cheap to use. So, you open up your phone, you download the Trading 212 app, you open a Trading 212 account, and if you're in the UK, you can open a Stocks and Shares ISA within the app. The reason you use the Stocks and Shares ISA is that the gains and the dividends are all tax-free. So if you're not in the UK, you'll have to do a little bit of research into what tax-advantaged accounts you can use. Inside the app, you can search for individual stocks like Facebook, Microsoft, H&M, MicroStrategy, Boots, anything you like. And you can buy a little bit of that company. You can buy fractions of a share, which means you can buy £10 worth of those companies. So that's why I would recommend buying £10 of 3 different companies that you like and 3 different companies that pay you a dividend, so that you can see the dividends come rolling in. Now you probably will first of all have dividends which are a penny, 2 penny, 9 pennies. My dividends are up to £10 now. And so you can get used to seeing the money coming in without you doing anything extra. And then you realize all you've got to do is build up that number until it's a meaningful amount for you. As well as your individual stocks, you can also buy an index fund. Now, an index fund is like a basket of stocks that contains bits of lots of companies. The index will track a certain section of the economy, or you can just buy a global index fund, which contains a bunch of companies from all across the world. Some big, some small. And so why would you buy an index fund? Well, with individual stocks, if those stocks go to zero, then you've lost all of your money. Happened to a friend of mine, basketball friend of mine. One of the guys on the team was saying, "Hey guys, there's this really great stock. I think it's going to go big. I think it's going to be massive." And a couple of the guys from the basketball team bought into this stock, and lo and behold, it crashed to basically zero. So one of my mates lost £5,000 doing that. He bought £5,000 of this stock, and it's ended up worth about, £50. One of the advantages with an index fund is that if a company goes bust, then it just falls out of the index and gets replaced with another one. You would have to have all of the companies in the entire index. So if that's the S&P 500, that's all of the top 500 companies in America going bust at the same time. If that happens, that's when you lose all your money. But if that happens, you've got bigger problems than just losing your money. It means that we've descended into chaos. Those preppers are finally getting what they've prepared for. So why buy individual companies? Well, with just £100, realistically, like I said earlier, you're just trying to learn about investing. If you buy a company, you can see, you might get interested. What's happening? Is it going up? Is it going down? And you can see what happens over time, and you can get used to the value going up and the value going down. As humans, we tend to be very loss averse, so we don't want to lose money. We would rather not lose money than win money. Like I said, at this stage, it's all about learning the investing game. What you can do is you can keep adding to your portfolio every month for 6 months and see how it looks. Commit to not selling anything at this stage. Just buy for 6 months, because you learn a lot about how you react and how the market works. Expect values to go up. Expect values to go down, sometimes a lot. And during this time, the most important thing is learning. Watch YouTube, listen to podcasts, read books. In 6 months' time, come back and look to see how your stocks are doing. If you've been lucky, they might be doing better than the index, or if you've been unlucky, they might be doing worse than the index. In such a short period of time, 6 months, it's very hard to tell anything. But you can check in with yourself and ask, how's it going? How do you feel? Are you ready to decide between index funds and individual stocks? If all your individual stocks are down and the index is up, maybe that'll answer a question or two for you. Are you ready to start investing more? That's what I would do with £100. What about £1,000? Again, as much as I'd love to turn £1,000 into £1 million, it's not going to happen. You are going to need to save more and invest more than just £1,000 if you eventually want to retire early or become a millionaire or whatever financial goals you might have. Now you need to level up your investing lessons. This is still about learning, both about how money works and how you work. I would do with £1,000 a lot of the same things that I did with £100. But this is where I would start to think about alternatives to the 3 asset classes I've already talked about. I can't stress how important it is to learn about how money works, because when you learn about how the government controls the creation of money and how that is used to make us poorer, you will learn the importance of money that the government can't control. That leads us to Bitcoin. I firmly believe that it is financially irresponsible not to at least learn about Bitcoin. If you decide afterwards that it's too volatile or that it's not for you for whatever reason, fine, fair enough. At least you've made that decision from an informed point of view. But don't just dismiss it without really having studied it. There's a bit more detail in episode 50 of the podcast. If you care about inequality, you need to care about Bitcoin, so you can go and check that out after you've listened to this. If you're ready to invest £1,000 and the goal is learning and education, then I would strongly recommend buying at least some Bitcoin. Maybe £100, maybe £50, depending on your levels of risk tolerance and how much you really want to learn. You might think, what if Bitcoin goes to zero? What if I lose all my money? Well, first of all, it's only £50 or £100. And secondly, you're way more likely to lose all of your money buying an individual stock because that company is much more likely to go bust than Bitcoin is to go to zero. If nothing else, watching the price of Bitcoin go up and down will train your mind and body to accept that prices go up and down. So when one of your stocks is down 10% in a day, you're no longer worried and panicking because you've trained yourself to know that going up 50% or down 50% is normal. All those people online panicking saying, oh no, my stock portfolio is down 3% today. You'll be able to laugh and say, guys, just relax. Bitcoin's down 30% today. Even if you never buy any more Bitcoin after that first £50 or £100, it's good just to keep it in mind that volatility is part of the journey. Where do you even start buying Bitcoin? Might be your next question. Although they are not the cheapest places nor the best place because you can buy or tempted to buy other cryptocurrency, Crypto.com and Coinbase are both very easy to use. So like you signed up for your Trading 212 account, you just download the Coinbase app or the Crypto.com app or go to the website, sign up for an account, and it's pretty straightforward to buy Bitcoin from there. At this stage, when you're graduating from investing £100 to investing £1,000, I wouldn't have more than 6 or 7 individual stocks. I'd have a big chunk in an index fund, as well as buying Bitcoin. I would consider buying a small portion of gold in your Trading 212 app, and you can also start to invest in property in the Trading 212 app through what's called a REIT, which is a real estate investment trust. Similar kind of thing, you just buy a fraction of a house and you get paid back a dividend which is related to the profit that house makes. Remember, the goal is not to hang on to your £1,000, but rather learn how to play the money game. Learn what works and what doesn't work. Because £1,000 isn't going to make you rich, but it's a good start in learning the lessons needed to become a successful long-term investor. Okay, what about £10,000? If you've built up your £10,000 from starting at 100 and working through the steps through 1,000, then you will have a good idea about what works and what doesn't work, particularly for you. From here on out, it's all about sticking to the plan for the long term. So if that is you, you can just continue to do what suits you, what works for you, until you're retired and beyond. But what about if this is your first £10,000? You want to invest your first £10,000. Maybe you've got a big cash pot in savings and you're ready to start making your money work harder for you, to start making money on your money instead of watching your purchasing power being eroded away by inflation. Or maybe you had an inheritance or a gift from a family member. Whatever. If this is your first £10,000 to invest, then you need to learn the lessons like a beginner. The only difference is that the stakes are higher now. You could go down the safe route and do what we talked about at £1,000. I would say that you don't need more than 10 individual stocks and not more than £2,000 in total in individual stocks. I'd put in 6,000 or 7,000 into index funds, maybe £1,000 into property or gold, and then £500 to £1,000 in Bitcoin, and see how that works out for you. If you like your job, you're planning to get wealthy over the long run, just doing this is a solid plan. If you are slightly different, if you want an alternative to the job that you're currently working, then you need to think slightly outside the box or completely outside of the box. Maybe you could find two friends in the same position as you and buy a rental property together. Maybe you could spend some of your £10,000 improving your network. Maybe send out 20 invites to thought leaders in your industry saying, I'm putting a network dinner on, would you like to come and spend a few £1,000s on a top quality sit-down dinner and position yourself as a leader in your industry? This is what Daniel Priestley did when he moved to the UK, and that kick-started a really successful business. You could upgrade some element of your life to increase the likelihood that you get into conversations with people who are playing the money game at a higher level than you. I never understood why someone would pay over £100 a month for a gym membership at David Lloyd when you get the same thing, almost, at a JD gym in town. But having been to both, now I know why. The types of conversations you're likely to be getting into in the sauna at JD gyms compared to the sauna at David Lloyd are completely different. If you're looking to network increase your chances of being around people who have money and want to grow it, then there is an opportunity where you pay more. Just to put this as an example, in the sauna at JD Gym recently, I overheard probably about 5 or 6 rugby lads talking about some party that they'd been to and how late they'd stayed up and how much they'd drunk and what women they had and all that kind of stuff. And I thought, not the kind of winning conversation that I want to be part of. Contrast that with the sauna at David Lloyd, when I overheard a conversation between some anaesthetists who were talking about some conference that they were going to go to that was going to be a big opportunity for them, and it was also an opportunity for them to go skiing because the conference was at a ski resort. And I thought if I was an anaesthetist, I'd be wanting to get in on this conversation. So that's one reason you could consider upgrading some element of your life to get into the right conversations with the right people. Alternatively, £10,000 is a decent chunk to start your own business. My wife started her own business a couple of years ago with just slightly less than that, and she and her partner are now making a bit of a name for themselves as thought leaders with a pioneering practice, which could lead to a much higher returns than the index funds, depending on how big they want to grow and what's next for them. If it was me, I'd consider going £10,000 all in Bitcoin, but I realise that's not for everyone, and certainly not for beginners. I trust that has been helpful. I trust that has given you some food for thought. I'd love to answer any questions, anything you want clarification on. Get in touch with me on Instagram or on Threads. I am Life to the Full Podcast. I'd love to hear what you think about this. What are you going to be investing in? Let me know. Don't forget to go back to listen to the first season on financial health, which starts on episode 12, called We're All Playing the Money Game, whether we realise it or not. And don't forget to check out episode 50. If you care about inequality, you need to care about Bitcoin. Until next time, it's been my pleasure. I appreciate your attention. Peace out.